please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Focus straight to the top story then this morning. The rupee extends its decline. Joining us now on the phone line is Shi Gao, FX strategist at Scotiabank. Hi Shi, thanks so much for joining in. Well, the rupee, even in today's trading session, it went towards the 73 odd mark, and the dollar index didn't really strengthen that much overnight. Where do you see the rupee head, and where exactly do you think the rupee has done its slide? Do you think it will find some stability at around 73.5, 74 odd?
Hi. I think the rupee's weakness could be attributed to a rise in oil price overnight and the nation's current account deficit. Yeah, as we know, dollar index is relatively steady, but dollar rupee remain supported above 72. So going forward, expect dollar rupee to trade in a range of 72 to 74 ahead of the September FOMC meeting.
Okay, so 72 to 74. This would be the near-term range, right? Over the medium term, where do you think the rupee will settle at, or the longer-term range for the rupee?
In the medium to longer term, I think dollar rupee will stabilize. I expect a modest rebound in rupee. Our year-end forecast is 70.
70.
Okay.
All right. So you expect the rupee to pull back from here then. What about the dollar index? What kind of levels are you looking at on the dollar index? Because if the rupee is slipping only because of the the petrol price spike that we're seeing, and that's what's going to affect our deficit numbers. So it appears that it was a bit of an India-specific problem. But in terms of the dollar index, how do you view that? Economic data in the United States has been looking good. We're factoring another couple of rate hikes in this year itself. So where does the dollar index headed to? 96, 97?
I think dollar index will trade in a range between 94 to 97.
Okay.
And we note U.S. President Trump could deliver verbal intervention. This year that he did twice. The first time when dollar index hit 696, and he intervened again when dollar index touched 97. So we think an excessively strong dollar is not in Trump team's interest. And the more important, market has fully priced in a September rate hike by the Fed, and priced in about 80% chance of a December rate hike by the Fed. So Fed's monetary policy tightening has been more or less priced in, unless Fed turn more hawkish.
Okay, so in terms of the yields, where do you see it headed?
This year, I think 97 could be the cap. I prefer see dollar index trading between 94 to 97, and if the ECB sounds a bit hawkish, dollar index may trade below 94.
I was actually asking about the Indian bond yield as well. We're currently hovering around 8.21%. We've seen a sharp, more than 25 basis points increase in the 10-year bond yield in India in the last 10 days or so. Does it inch higher from here? What would be your year-end forecast?
For the India bond index, I think bond index will relatively remain supported, not because of bond outflows, also because of some factors that may support India's inflation, such as rupee's weakness, such as resilient oil price, and a significant rise in the MSR. So I think the 10-year Indian government bonds will remain supported around 80% or even higher.